Euro Swiss daily forecast, December 16th, FXEmpire.com. The Euro Swiss pair has been stuck in a range for quite some time now, but the Thursday session might have been the first real attempt to break out of it. The pair fell as the Swiss National Bank offered no new remarks about lifting the floor it has imposed in this pair at the 120 level. The market had speculated the pair could be forced back above 125 or even 130 by the Swiss National Bank during the meeting on Thursday. The gap from early November has been filled, and now the real question is whether or not this gap gets broken down below. If it does, it's a very bearish sign, although of course 120 will be defended by the Swiss as they've publicly stated. The Swiss economy looks to be going into recession, and their biggest customer, Europe, is as well. So by all means the franc should devalue naturally, but the euro is so toxic currently the desire to buy it for any real length of time doesn't exist. The 125 level above has been extremely resistive, so we feel truthfully the odds are that we will continue to bounce around in this range between 122 and 124 for the foreseeable future. A break lower, of course, will be treated with some suspicion, and of course anything that approaches 120 will have traders bailing, as they know the Swiss National Bank will more than likely step in right away. The 120 to 124 range should contain this pair for the foreseeable future, and as such we are playing as range bound. 122 could produce a little bit of a bounce, and as such, as long as you're willing to have a couple hundred pip stop loss, is a decent place to go for a buy. Of course, it's a very short-term thing, as 124 has been so resistive. In this current environment, it just seems like this pair is stuck, so you might as well take care of the short-term scalping opportunities that present themselves.